business owners know they should have an LLC. But what many don't understand is whether that LLC is actually helping them save taxes. So today we're going to separate fact from fiction. I'm Lisa Marie Odeja, CPA, EA, and a former federal government auditor. And I specialize in proactive tax planning for real estate investors who are looking to reduce taxes, build wealth, and keep more of what they earn. Although real estate investors are my primary niche, many of these same tax planning concepts can also apply to profitable business owners. One of the most common questions business owners ask is, should I form an LLC or elect S-Corporation status? The problem is that many people are trying to answer that question before they understand what either one actually does. And social media has made the confusion even worse. One video says, every business needs an LLC. Another says, an S-Corporation is the key to saving taxes. And somewhere in the middle, business owners are left wondering which advice actually applies to them. So, in this video, I'm going to break down the difference between an LLC and an S-Corporation, explain where tax savings may exist, and show you why choosing the right structure starts with understanding your goals and not simply following someone else's strategy. And by the end of this video, you'll understand why LLC versus S-Corp may not even be the right comparison in the first place. So let's start with an LLC. One of the most common things I hear from business owners is, I formed an LLC because I wanted to save taxes. And that's exactly why so many business owners end up believing things that simply aren't true. Fact: an LLC can provide important legal protections and help separate business activities from your personal activities. Fiction: an LLC automatically lowers taxes. In many cases, it doesn't. Let me show you what I mean. Let's assume your business earns $75,000 after expenses. If you're operating as a sole proprietor, that income is generally subject to income tax and self-employment tax. Now, let's say you form a single member LLC and absolutely nothing else changes. Many business owners assume their taxes automatically go down, but in many situations, they don't. The income is often taxed exactly the same way it was before. Same income, same tax treatment, same self-employment tax, and that's one of the biggest surprises for many business owners. Creating the LLC and creating tax savings are not necessarily the same thing. Now, if that's true, why do so many business owners eventually start talking about S-Corps? Because this is where tax conversation begins to change. An S-Corp is not a legal entity. It's a tax election. And under the right circumstances, that election can change how some of your business income is treated. Now, using our same example, let's assume the business earns $75,000 after expenses. With an S-Corporation, part of the income may be paid as salary and part may be distributed to the owner. Now, before social media convinces you that every business owner needs an S-Corp, there's something important you need to understand. The IRS requires business owners who actively work in the business to receive reasonable compensation. And what constitutes reasonable compensation really depends on the facts and circumstances of the business, including the services performed, industry norms, profitability, and other factors. And that's one reason strategic planning is so important. A qualified tax advisor can help determine what may be considered reasonable based on your specific situation. So, in other words, you can't simply classify all of the income as distributions and avoid payroll tax. That's not quite how the rules work. But with an S-Corp properly structured, some business owners may reduce certain employment taxes compared to operating as a sole proprietor. So, there you have it. That's why S-Corps receive so much attention. In fact, this is usually the point where business owners start asking, should I elect S-Corp status? And the answer is maybe. Here's a fact. Some businesses can benefit significantly from an S-Corp election. Fiction? Every business should have one. The reality is that S-Corps come with additional responsibilities. You have things such as payroll, additional tax filings, additional compliance requirements, additional administrative work, and depending on the level of profit, those costs may outweigh the benefits. I've seen business owners elect S-Corp status way too early and create unnecessary complexity. On the other hand, I've also seen business owners wait way too long and miss planning opportunities. The truth of the matter is, both situations can be costly, and that's where strategic planning becomes important. Because tax planning isn't about chasing whatever strategy is trending on social media. It's about understanding whether a strategy fits your specific facts and circumstances. As a CPA, EA, and former federal government auditor, I've learned that the best tax strategies aren't necessarily the most aggressive. They're the ones that fit the taxpayer's facts, support their goals, and can withstand scrutiny if questions are ever asked. And that brings us back to a point I mentioned earlier. Many business owners think they need to choose between an LLC and an S-Corp, but they're not actually opposites. An LLC is a legal structure. An S-Corp is a tax election. And in many cases, a business can be both. That's why the better question isn't simply, should I choose an LLC or S-Corp? The better question is, what structure and tax treatment make the most sense for my specific situation? The goal is to understand how the rules apply to your specific business. If you are a real estate investor or profitable business owner and you're not sure whether your current structure still makes sense, now may be a good time to review it before another tax year passes. You can schedule a consultation using the link below or scan the QR code on the screen. And during that consultation, we'll discuss your concerns, your goals, and whether we're a good fit to work together. I'll explain how my firm works, and if we both agree that it makes sense to move forward, we'll discuss the next steps. If you found this video helpful, please be sure to like, subscribe, and share it with another real estate investor who may benefit from hearing it. Thank you for watching, and I'll see you in the next video.